All right, coming at you, breaking down the latest stats for August. This comes from our newly formed Cornerstone Association of Realtors. Headline, sluggish sales and rising inventory persisted through August. Prices ease and supply choice improves. Hamilton, Ontario, the Hamilton real estate market maintains recent trends as sales continue to slow and inventory levels rise. August sales slowed to 690 units, contributing to the year-to-year decline of 7%. When we compare the market to long-term trends, sales are down across all areas. Burlington continues to report the tightest market conditions in the region. Quote, there is more inventory than we have seen in recent years, which provides prospective buyers with flexibility and choice. We are seeing many hopeful buyers continue to wait for interest rates to come down as they are predicted to do. Now is a good time for buyers to take advantage of increased opportunities. When interest rates come down, there could be once again a strain on inventory, end quote, says Nicholas Von Brado, Cornerstone spokesperson for the Hamilton Burlington market area. Okay, so getting into this, some I agree with, some I don't. Obviously, long-term trends, sales are slowing as we are seeing inventory increase. I thought it would be cool to go back 10 years just to track the number of sales in August 2014 versus the number of sales in August 2024. So in August of 2014, we had 691 residential sales. And in August 2024, we had 433 residential sales. So that 690 transactions in that release from Cornerstone is that includes commercial and as well. So we're just stripping that out and going just straight for residential sales. So about a 40% drop, 38% drop from 2014. With 4.5 months of inventory. So yes, we are seeing inventory slowly creep up. Now, the comment, providing buyers with flexibility and choice, this is true. There is a lot more inventory for people to look at, and buyers are being discerning. Those who are qualified to buy are being very, very picky, and they're like, yeah, you know what? We kind of saw this bull market get out of hand. We saw people take on way too much debt. But if we do choose to move forward and make a large purchase and take on all that debt, we're going to be very, very specific about what we're looking for. And buyers are understanding that more inventory is coming on market. I do not believe that the interest rate cuts will spur some kind of crazy fall bull market. My opinion is that, you know, I guess we're up to 3 now. These cuts are just kind of correcting the mistake that the Bank of Canada made with those extra rate hikes that we didn't need. And, you know, we have a huge amount of debt to income in Canada, and everybody's maxed out already. And with the stress test, it's very difficult for people to qualify. So I do not think that we are going to see inventory drop to move back into seller's market territory. We're in a very fine, balanced market right now in Hamilton. Now, good time for buyers to take advantage of increased opportunities. This is true, but once again, you know, there is still a smaller pool of people who are qualified to buy. Now, continuing ever onward, new listings have remained relatively consistent with long-term trends. However, listings are being met with slower sales, resulting in inventory levels above both last year's and long-term trends. A surge in inventory relative to sales has caused the months of supply to rise to 4.5 months, which we mentioned earlier, reflecting the highest level seen for August since 2010. So, highest months of inventory in 14 years. Higher inventory levels compared to sales have placed downward pressure on home prices. Now, here's the interesting thing. In August, the unadjusted benchmark price stood at $840, down $840,300, will be specific, down over last month and over 2% below last year's levels. The steepest price decline is occurring in the oversupplied apartment condominium sector. Now, in the GTA in general, there's about 12 months of supply, and we're probably going to start to see things like builder bailouts, condo developer bailouts, that kind of thing. We'll see the construction organization kind of going to the state and say, hey, we were building all this stuff based on all this. People aren't closing. What are we going to do? Now, this is a very dangerous thing to have begin happening. If you have hundreds of thousands of units sitting vacant, nobody closing on them, people are carrying massive amounts of debt. And I'm not talking about individuals, I'm talking about developers as well with, so that has a consequence for the little guy who's going to try to get a mortgage. Banks are going to be a lot more strict with their lending criteria. We're all reading that they're having higher cash reserves on hand for mortgage defaults, for credit issues with people that they've lent money to. So an interesting time. I'm not going to beat the drum and say that this is like a super optimistic thing for the economy in general, or for the housing market in general. This balanced market appears to be good for both sellers and buyers, and a benchmark price of $840,000 is not nothing. We've been above $800,000 for a long time in the Hamilton market. It is the third most expensive market in Canada. Toronto, Vancouver, Hamilton. Welcome to Hamilton. Prices for residential resale appear to be relatively stable. So what does this mean? For sellers, make sure that you're presenting your home exactly right. Take the extra time and be willing to be on market longer. We are so programmed that if your house doesn't sell in 2 weeks, it's an absolute catastrophe. But it is more normal for things to sit for 30 to 45 days, have a little bit more room, allow your buyers to do due diligence. But, a good product presented well, priced right, always will have action. Yet below that average sales price, $550,000 to $750,000, it is still very, very active. So buyers in that zone, if you see a house that you like, if it checks all your boxes, don't be afraid to act. So for a buyer, buyers have come and seen the light that, you can't just egregiously lowball on every single property that's been sitting on the market for a little while. There's always going to be room for negotiation with everyone, but sellers are standing firm on their prices, which is why we're still seeing those prices above $800,000. Now, these are sellers who do need to sell, but they're not really willing to just, take whatever comes their way unless there's low on showings, low on offers, and there's some kind of other mitigating force. So overall, a very, very interesting month. And, it'll be interesting to see what happens in September. We are seeing new listings come on the market. Keep your eyes peeled on our channel as well. We will have a bunch of new listings coming out for you guys. And as always, if you have any questions about your unique real estate position, or you just want to have a courtesy call, go over, have a strategy meeting, it's always good to check in on what is most likely your largest asset. Anyway, be sure to like and subscribe to this video if you're watching on YouTube. Drop us a comment if you're watching on Instagram, and we'll see you in the next one. Take care. Bye for now.